When we think of property tax, we normally think of something like real estate, right? So you own your home, you're assessed property taxes, and those fund the school district in your area. But there's also a different type of property tax, and that's called personal property tax. And personal property tax normally is going to pertain to, and I'll just put a little thing here. Normally it's going to be something like a vehicle, so like a car, a boat, and in some cases, in some states, it actually could be something like tools, right? Or some kind of equipment that you use in your business. So it depends on the locale. It depends where you live. And for the most part, personal property tax is assessed at the local level or at the state level, right? So, and let me just cross this out so you know you're not talking about that. So at the state or local level. So there's no federal personal property tax, right? This isn't something you file with your annual tax returns to the federal government. So not all states have a personal property tax, so it depends on where you live. And so when they assess the personal property tax, whether it be your local government or the state, it's what's known as an ad valorem tax. And what that means is that similar to real estate property tax, it's based on the value, right? So let me just, actually, we'll just say the assessed value. It's just very important, right? So you might be thinking, hey, my car, I think it's worth $5,700. Well, maybe the Kelley Blue Book says it's worth $7,000, and maybe that's what the local area that government uses to assess personal property in that region. So whatever they have for their assessment process, they're going to come up with an assessed value of your personal property, and then you're going to be assessed taxes on that basis, assuming that you have a personal property tax where you live. So I'm just going to walk you through a short little example. I know that's probably some of you already got it, but we'll just kind of walk through. Let's say that you own two cars, right? So you own two different vehicles, and you have personal property tax where you live. And so let's say that the assessed value, and let's see here. So I've got a couple values here. We're going to say these are the assessed values, not what you think the value is or necessarily even what you purchased the vehicle for, although that might be relevant depending on where you live. But let's just say for whatever reason, the assessed values of the cars are $2,900 and $1,700. Okay, however those numbers were arrived at, those are the assessed values in this example. And the personal property tax rate where you live is 1%. So all you would do then is just take these assessed values and you just multiply it by the tax rate of 1%. So it's pretty simple. It's in that sense, it's not all that different than real estate property tax. And in this case, the tax that would be due would be $46. All right, and again, I just took these numbers and multiplied it by the 1%. So that tax is typically due on an annual basis. So every year you would have to incur this personal property tax. Now, one thing to kind of bear in mind is that you might be assessed a personal property tax for a vehicle that you've already sold, right? So you might say, hey, that's kind of weird. So let me just give an example. Let's say you sold this vehicle. Let's say you sold it on May 15th, whatever the year is. You sold the vehicle on May 15th. And then later, you get a personal property tax bill for it. And you say, hey, wait a minute. I don't own this vehicle anymore. I got rid of it. Why do I still have to be assessed tax based on it? Well, sometimes where you live, they'll have like some kind of deadline or something. They might say, okay, as of preceding January 1st. So let's say you sold it on May 15th, but you owned it. I'm just changing colors here. Owned as of preceding January 1st. And again, it depends where you live. You want to check the regulations where you are. But this is just an example. So let's say that you owned the car as of January 1st this year, and whatever vehicles you owned as of January 1st, they go and they make the assessment, they say what the assessed values are, and then they assess you the property tax. And then even if you sell that vehicle a couple months down the road, later you get the property tax bill for it, and you still have to pay it. Now, the following year, right? So let's say that so let's say that this is 2019, right? So let's say it sold it on May 15th, 2019, right? So, and then as of the preceding January 1st, so we'll say that was January 1st, 2019. So you owned it as of the 1st on 2019, but then you sold it on May 15th, and at some point later in 2019, you got the bill. But let's say that now we're talking about 2020. Right? So now in 2020, you're going to go, and Now, as of January 1st, 2020, you no longer own the vehicle. So now at that point going forward, obviously you won't continue to incur personal property tax for this vehicle, right? So it's just kind of a thing that year in which you sell the vehicle, you may still be assessed personal property tax for it because you owned it as of the date when the assessments were